Hello everyone, PS from PS Invest Plays here today. Healthcare giant Johnson & Johnson has a lot going for it that would appeal to investors. After reporting good earnings in its last quarter, its stock rallied over 5% to make a new all-time high. And since March 2020, its stock is up over 47%. Is this trend going to continue, or we can expect a pullback or maybe sideways movement going forward into 2021 and beyond? In this video, we will understand its business, its financials, review its future outlook, and review its charts using Elliott Wave theory to see how we can make money. So stick around. I think you'll like what I have in store for you today. Johnson & Johnson, ticker JNJ. Johnson & Johnson is an American multinational corporation founded in 1886 that develops medical devices, pharmaceutical, and consumer packaged goods. JNJ is one of only two publicly traded companies that holds a highly coveted AAA credit rating from Standard & Poor's. That's a higher credit than the US government, and it implies that S&P has the utmost confidence in J&J's ability to make good on its outstanding debts. What really makes Johnson & Johnson tick is the company's three operating segments, each of which is an important piece of the puzzle. Its consumer healthcare product segment is slow growing, but it has strong pricing power and generates predictable cash flow. There's also the medical device division, which has grown slowly of late, but is perfectly set up to take advantage of an aging US and global population. Lastly, pharmaceuticals are responsible for the bulk of J&J's margins and growth in the near term. Although brand name drugs have a finite period of sales exclusivity. These operating segments have worked together flawlessly to consistently push J&J's adjusted operating earnings higher year after year. While limited study results showed that their vaccine might not be as effective against the Delta and Lambda variants, the company has been disputing that in their study. Judging by the reaction, the market trusts the company. Their vaccine has two main advantages when it comes to the competitors like Pfizer or Moderna. First of all, it is a single shot dose, which makes the vaccine exponentially easier. The second is that it doesn't require ultra cold storage, making it easier to transport and handle. Since J&J runs a non-profit program for its vaccine, those sales won't contribute much to profitability, but they should have a positive contribution to non-tangible assets of the company like brand awareness. ROE, or return on equity, is a valuable tool to assess how effectively a company can generate returns on the investment it received from its shareholders. For J&J, ROE is 26% as of July 2021. So this means that for every $1 of its shareholders' investments, the company generates a profit of 26 cents. J&J's ROE is higher than the industry average of 19%, which is remarkable. J&J has faced several legal challenges relating to its talc and sunscreen products, and the headaches aren't going away. J&J has been able to absorb the impact of significant legal costs thus far. J&J is looking at dumping its liabilities related to its talc baby powder products into a new business and then putting that business into bankruptcy protection. This is a big move by JNJ. The move would help to limit the company's legal obligations relating to that issue. From a strictly financial perspective, JNJ's business hasn't felt much of an impact on its bottom line with these liabilities as of yet. When JNJ released its latest quarterly numbers on July 21st, its profit for the period ending April 4th looked as strong as ever, coming in at over $6 billion. Looking at the financials for JNJ, revenue, gross profit, EBITDA, net income, earnings per share, EPS are solid and excellent for JNJ. If you like this video, don't forget to subscribe, hit the like button. Also, hit the notification bell icon so that YouTube notifies you when I upload a new video. We are well past the point where JNJ is going to floor Wall Street with its growth prospects. However, JNJ has the potential to deliver high single-digit earnings growth and maintain its 59-year streak of base annual dividend increases. JNJ dividend for its common shares now stands at $1.06 per share quarterly, or $4.24 per year. At its current price, that amounts to a cash return of $2.41%. To put the payout into perspective, the average dividend yield for the S&P 500 is 1.3%. Finally, JNJ is an incredibly profitable company, and the stock is a dividend king that you can likely count on for continued payments for the foreseeable future. It seems the recent momentum will continue. This is also indicative in the charts, where I see the stock price to increase considerably in the next 3 to 5 years. Now let's look at the Elliott Wave for JNJ. The bull run that started for JNJ way back in 1980s is still not over. It has completed its first 4 waves, and now it is in its final leg up, which is wave 5. If we look deeper in this wave 5, we can see that the first 2 waves are over, wave 1 and 2, and currently it is in its wave 3, which is the strongest bull wave, where we can expect a good appreciation in its stock price. I expect this wave to peak at $230.10. At this price point, I expect a pullback, bringing the price down to $201.04. After that pullback, I expect the final leg up, which is wave 5, to begin and should end at around $252.65, which translates into a 43.5% profit from today's price. We can expect JNJ to hit the price target in the next 3 to 5 years. Now let's summarize. The current stock price offers excellent entry point. If there is a pullback, accumulate. Nibble first and keep nibbling whenever there is a price correction, smaller price correction. And when you see a bigger price correction, accumulate. In the long term, as I said earlier, in the next 3 to 5 years, I expect the stock price to reach $252.65, which means a profit of 43.5%. The icing on the cake for JNJ stock is that it pays a very handsome dividend. $1.06 per share quarterly, or $4.24 per year, which is on top of the stock price appreciation. What do you think of this analysis? Please leave me a comment and let me know. As always, don't forget to subscribe, hit the like button. Also, don't forget to hit the notification bell icon so that YouTube notifies you when I upload a new video. Until then, bye-bye.